Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. In this video, we will be discussing about the technical structure of dollar index. Now, dollar index is a widely tracked currency index which indicates that when the prices go higher, it means that the dollar is getting stronger and stronger. When the index falls, it means that the dollar index is getting weakened. Now, if I look at the technical structure, so let's look at the first chart over here, which is the daily chart of dollar index. And if you look at the two red lines on your chart, the one resistance at 93.5 and second at 94.5, we saw that the in the recent uptick momentum, the 93.5 was taken out, but 94.5, which was October 2020 high, was strongly resisted in the recent momentum, and prices are back towards the lower level from 93.5. So 94.5 is playing a crucial resistance, which is October 2020 high. And if you look at the technical structure over the blue lines over here, this is called broadening wolf wave pattern, and this is the bearish pattern which indicates that the bullish momentum is ending and the bearish momentum starts, which is reversal in nature. So if you look at the 1 2 3 4 and 5 on your screen, the numbering, so the wave goes in 1 2 3 4 and 5 generally triggers the reversal levels. In the same dollar index chart, if you look at, we have seen that prices are reversing from 5. We have seen twice and thrice this level was tested, but in the end it reversed from the resistance zone. So it marks a crucial reversal levels. Second, if you look at the green over here, 161.8, and as per the wolf wave, when the fifth high or the fifth wave high is 161.8 of third and fourth, in this case the 160 was around 94.65, and we turned from around 94.5556 levels. So again a slight below 161.8 levels, and again as per the wolf wave, this is called the strongest level of 161.8. so again this is turning out to be a very strong reversal structure. Now, coming on to the targets, generally if you look at the wolf wave pattern, the targets are measured at when the 1 and 4 one high and 4 lows connected and line is extended, the targets are measured. So in this case the targets comes slightly around 90 level as per the wolf wave pattern, 90.5, which indicates that the dollar index is likely to go down and dollar is expected to weaken around against the other currencies. Okay, we just slightly went on to check the how the oscillators are panning out. So first we looked at RSI over here. So look at the second chart, the same price structure with the RSI. Now if you look at the RSI, RSI have always resistance around overbought zone, which was about 70, and turning towards the southwards momentum, which indicates that the strength is not in the bullish momentum, it's actually into the bearish momentum, and the prices are going down and down. Second, we looked at the MACD, moving average convergence divergence. Now if you look at again the averages on the MACD gave negative crossover. Now the histogram is also going below the integer line, which is the zero line, indicating that the bears are in control of the structure over here, and hence we believe that the wolf wave pattern plus the oscillators are indicating that the prices of dollar index is likely to go down. Now, what will it impact on equities and commodities? Well, if you look at when the dollar index weakens, which means the dollar is weakening, rupee appreciates, and when the rupee appreciates, FII tends to pump in the money into the India, and it is beneficial to the Indian equity market, which means that when the money are infused into the Indian markets, they tend to buy the stocks, and which means that the buying is expected into the Indian markets, and it is positive for Indian equities. So probably a bullish momentum can be on cards for Nifty and Sensex. Second, if you look at on the gold or the commodities part, when the dollar index weaken, it is inversely related to the gold. So these index weaken down, the gold is expected to go higher, because gold is widely traded commodity, plus dollar index is widely traded currency index. And when these inversely related things happen, which means that dollar index in our case is expected to go down, gold is expected to at the same time is expected to go higher. So one should keep a watch on these dollar index. We are expecting around 1990 and a half on dollar index, which will be beneficial or positive impact on the Nifty or Sensex, and as well as gold. So keep a watch on this. It is very important to keep a track on dollar index when you are expecting that Indian markets tend to continue its bullish momentum. And gold, which has come back very strongly from around somewhere around $1,700, and once the 1835 1836 resistance is marked, we might see that the trigger could explode into the gold as well. So keep these levels into the mind, and track dollar index to keep a momentum check onto the Nifty and Sensex. So just signing off. Before I sign off, I request click onto the subscribe button, and do not forget to click onto the like button if you think our videos are really helping you out, and do comment how do you think our videos are and is it helping you to make profits out of the markets. Signing off, Brijesh Bhatia.